So we thought it'd be an interesting question to ask you guys, the traders, which stocks, which mega cap tech stocks you are most concerned about going into earnings, especially since we have a huge slate this week. And interestingly, Guy and Mike agreed on one name, and that would be the mega cap tech stock that has gained the most in the past 3 months, the past quarter. That would be Meta. Why?
Not an indictment on Facebook by all. I mean, valuation at this level is trading at a market multiple, probably 18 times next year's numbers, and you have revenue and EPS growth to back that up. It probably should be a higher multiple. I'm worried because if you think about who their advertisers are, small, medium-sized businesses, we're starting to see the Russell roll over, the micro caps roll over as well. Those represent, obviously, a lot of these small and medium-sized businesses. If there's a lag or a delay or a push forward in terms of their advertising dollars, Facebook will be the first one to feel it. So if you start to get some, rhetoric or some talk around that slowdown, that could augur potentially poorly for the broader market, which is why I'm looking at Facebook. Not again in terms of where the stock is going, but in terms of the tell for the broader economy.
Mike, why'd you pick Meta?
I picked it, actually. Part of that, I think, is some of the same reasons that Guy was just talking about. There's another one, too, of course, which is what is management going to do? You know, people often talk about some of these companies as having levers that they can pull to turn on or off profitability, to turn on or off free cash flow. This is a company that demonstrated they have those levers and they have used them. That's positive in one sense, which demonstrates that they can generate huge free cash flow. It's a negative when they elect to start pursuing things like the metaverse and throwing buckets of money at it, and suddenly you start seeing free cash flow drop to near zero, as it did at the tail end of last year. And that's really what caused this swoon. So if we start to see management start talking once again about investing in some of their visionary projects, that, I think, is a potential risk. But the company is very cheap if they don't do that. And even with some of the pressures that Guy was just talking about, you know, they might actually get some flow from X, for example, which has obviously changed their algorithms. And I think some of the content creators might start moving to some of Meta platform instead.
In terms of turning on and off the spigot, that sounds like Amazon, which Julie is worried about. I mean, interestingly, Amazon is exposed. It's consumer-facing on the retail side, but then it's also enterprise spending-facing on the AWS side of things.
Yeah, and I think part of it, too, is for them, it's a little bit, they don't have quite as many variable costs as something like a Meta. And so I worry more about the level of kind of CapEx investment, hard dollars flowing out of that business in order to be as competitive as they can be in AI. I think there's a little bit of a thinner margin for them, no pun intended, on being able to weather any kind of storm in enterprise spending or the consumer. So I'm a little bit, I think, generally speaking, big cap tech, I think, has earned its premium multiples, broadly speaking, right? Because you're exposed to secular growth trends. These have excellent balance sheets. They are in businesses where it really pays to be big. But this is the one that I think is the most exposed to the consumer. And for that reason, I'm a little bit more concerned.
With all due respect, I think you guys are in D2 right now. I think D1 is Microsoft and Apple. That's right. That's a college.
Division 1, Division 2.
It's a college.
He's basically calling us the JV, and he's the vice.
Well, I'm not calling you the JV per se, but those companies, it's Microsoft. It's the second most important company in the world. It's the company that, to me, is in touch with the enterprise. They were the one that really almost even started the AI frenzy on some level with ChatGPT. They're the one that I think is the most resilient business model, and they're the one of the charts that, along with Apple, at the end of October and the beginning of October, really started to scare everybody and say, is the market falling out of bed? Their chart has done better than Apple's. I think the biggest issue with Microsoft is not that their earnings numbers are going to be difficult. I think Azure's been guided to mid-20s growth. I think it's probably what they're going to give you. It's that the street wants to be at 35 times on this. And that's, relative to history, that's expensive. So it's the second most important company in the world. It's the second biggest company, certainly in terms of market cap. That's D1, folks. That's the one to be worried about, and that's the one that I think has the most on the line.